I'm Jacqui Briscoe from Novus Communications. Today we'll be discussing and unpacking what's happening in debt capital markets, enabling investor participation. On the 19th of January this year, UK primary market rules changed, making it easier to include retail investors into IPOs, equity fundraisers and bond issues. It's a major shift. What was once a complex, highly restricted process is now much closer to a simple online share trade. Driving much of this change is Stacey Parsons, Managing Director of RetailBook. She's pushed through long-standing barriers and worked closely with regulators to open up access for everyday investors. She joins me today to share what's really changed. Welcome, Stacey.
Thanks, Jacqui. Great to be here today, and thanks to the team.
Thank you. Well, we could certainly cover a lot of ground today, but what we're really trying to focus on is understanding bonds and why now is really the moment to pay attention. Stacey, let's start at the beginning. How did you find your way into the world of fixed income?
So it's been a very long journey. I've been in the market now for just under 30 years and working in financial services, which is something I'm exceptionally proud of. I actually joined pretty much closer to some of your audience's sort of bandwidth, which is I was very much around when we were looking at the smaller company area of the AIM market back in 97 and 99, around those areas. But very quickly, I was able to move over to what was then the gilt edge market end of the scenario, which was very much fixed income. And obviously, fixed income has come much, much further forward in the last 20 to 30 years in terms of where I started in the gilt market, even though that's very credible and prevalent at the moment, through to actually running the fixed income trading desk at the investment bank that I work for. And when I stepped into that world, I kind of recognised that this was a much broader, debt capital markets is much broader, just as well established, but much broader than the equity space. So it's always good to be mindful of the fact that the UK has a bit of an equity culture, but fixed income plays a massive part of everybody's portfolio, especially in that wealth journey.
Yeah, sure. Thank you. And was there a moment early on in your career where you thought, well, hang on a minute, retail investors are being completely left out of this market?
I would say that the journey for a retail investor has changed very much in the last 30 years. If you consider that, what we look at nowadays as a self-directed investor is much more prevalent in 2026 than it ever probably was in the early sort of 2000s. And the demographic and the individual has changed on that journey. In the early 2000s, it was much more around if you knew how to trade and knew how to access, whereas now we've got global deep capital markets that really enable a much broader set. I would say, was there a moment? Yes, probably particularly professionally and personally for me. I was very aware of something that was bubbling away in the background, which was called the London Capital and Finance mini bond scandal in the bond markets. And it made me challenge myself to think, why are debt capital markets not as inclusive as perhaps the equity capital markets are? So yeah, about 5 years ago, I started to work as part of chairing and founding the Investor Access to Regulated Bonds Working Group with a very good cohort, a friend of mine, Nick Dilworth, who sort of knows the FCA encyclopedia rule book back to front. So he was able to help me do that. And then we started to work with the London Stock Exchange, the regulator, the Treasury and the government to really think about how can we make sure that all of our capital markets have inclusivity at their core.
I mean, fixed income has traditionally been gated to an institutional market. I mean, one very real barrier to entry was the £100,000 minimum bond size, which effectively excluded most retail investors. What were the biggest barriers you had to challenge and gave you the confidence it could be opened up to everyday investors?
So I think that we've come on a regulatory journey, and everyone recognises that a lot of the events that's happened throughout, whether going from the great financial crash through to thinking about some of the consumer scandals that we've had, we've become quite a reactive in terms of putting a lot of barriers in front of us from a regulatory point of view, and it's quite right to do so because we've got to remember that the market runs from very vulnerable through to very professional investors, and it's right that we protect that integrity. But it became quite apparent to me that there was probably a blocker in the system, which was a bit of market practice, a little bit of lack of understanding how far that retail investor journey had come from, like I mentioned in the previous conversation. And so we worked collaboratively, actually, and to the point that which I think, when I think back on this now, we actually put an intervention into the Financial Services and Markets Bill in the House of Lords to say that debt plays just as valuable role in an investor journey as equity. I think the £100,000 threshold, or €100,000 actually threshold, was part of a significant proportion of a regulation that came in over those years, and so being able to be quite pragmatic and forward thinking with the regulator in particular, and also the sort of the regulator community and the wealth management community, we were able to bring forward a solution which was launched on the 19th of January with new prospectus regulation enabling plain vanilla listed bonds to be accessible at issuance in a lower denomination under that 100,000 denom. So there was a lot. I mean, I've given you a very short answer to a 5-year journey, but the crux of the answer there really is that it didn't, it does take a village to change a world. And that really, really had to come together. We really had to pull together everybody's sort of expertise. And I'm not sure if it was confidence or maybe blind passion that just took me to the end with everybody in the room to get us there. And we did get us there. And as you probably would have seen, Jack, on the 19th of January, we were very, very proud to be standing on the balcony next to the Deputy CEO of the regulator, the Financial Conduct Authority, and also Julia Hoggett, who is the CEO on the stock exchange. So that was kind of a proud moment for us as a team, I think.
Yeah, I sure did. No, it was fantastic. So I'm guessing, when you first started pushing for retail access, what was the general conception? I mean, were people quite polite, or did they think, oh no, what's she up to now?
Well, I would say that when I started the conversation 5 years ago, or just over 6 years ago, we were in a different space with interest rates, and rates were moving quite heavily upwards from a sort of a zero base, if you like. So people were starting to recognise that this was something that investors required. We also recognised that the wealth management industry really wanted to get access to this product. I'd say that unfortunately market policy doesn't always follow very quickly with market practice. So you can change as much regulation in the system as you like. Unfortunately, practice sort of tends to go back. There were a lot of conversations at the beginning which were, shall we say, I had to have a very good sense of humour in order to get through the meetings, which working in the city for 30 years does allow you to have a good sense of humour. But it's really, really good to see those people now come around to the table and understand why this is important. And more importantly, one of the things I talk about really broadly is actually primary capital, whether that be equity or debt, is really productive for our economy. It feeds our research and development, it feeds growth, it feeds innovation, it feeds jobs. These are all things that matter.
So, Stacey, for anyone that's never bought a bond before, what do you think the biggest misconception is?
Well, weirdly enough, I think that people are much more familiar with a broader range of products nowadays, especially in financial services, than they've ever been. And that's from ETFs and ETNs through to looking at much more equity focused, thinking about what a fund can do. We've got lots of things that sit in the system to encourage people to come forward. We've got a retail investment campaign that the government are looking at, in spring, late spring this year. We've also got the targeted support regime, which has been, it's a really, really big challenging and shaping moment for the market to bring more people forward. So I don't necessarily sort of pinch on this point that people don't understand products. I think it's more that sometimes we don't enable people to have access to a product, and therefore the education doesn't flow as quickly as we'd like it to. I'd say that 2026 feels like a pivotal year in a number of areas. As I mentioned, some of those things that are coming through from sort of whether it be regulated support from the FCA or whether we've got targeted support, which is coming through as a new regime from the industry. The bonds in particular are pretty sort of self-explanatory. There is always a capital at risk element, and we've worked in the city and the financial services to understand that long enough. But they do give you an income, which is quite important. And this is an important story at the moment, especially when we see a lot of people with sort of portfolios that may require an income element, especially if they're sort of a little bit later on in life. And that kind of plays into a narrative of maybe the hoarding cash scenario, which we sort of hear quite a lot. So we're looking at a demographic of investors that may wish to be using the bond market as part of an income portfolio, may well be a little bit sort of further down or coming towards the retirement journey. That's quite often some of the things we talk about. but also they want to get better, increased access to better returns. And obviously corporate debt can offer you a little bit more in terms of the investment yield that you can get back comparative to some of the others out there. So, I'm not here to give advice. Of course, I'm not. I'm certainly not here to encourage anyone to buy into any one product in the market. But I think it's all about variety. It's all about having access to a variety of products that you can make a decision based on your self-directed investment, or either going through your wealth manager, or so on and so forth.
Okay, thank you. Well, I mean, before now, issuing bonds to investors meant dealing with quite complex disclosure rules, detailing prospectuses and high costs. Now there's a single harmonised set of rules, we say, and prospectus summaries are no longer needed. Why do you think this really matters now?
The bond markets are a critical piece of infrastructure, both here, obviously, in the UK and globally. And so anything that we introduce or enable always has to be additive to the system and can't be complex, and certainly can't slow down procedure and process, because, as I said, the bond markets are such a vital part of our infrastructure. But that said, technology and the ability to make sure that we streamline things, which is what the plain vanilla listed bond regime can do, does give issuers a really strong opportunity to be quite advantageous in their programs. It also enables them to diversify their portfolio base in terms of their investor base when they're coming for a fundraise. And also from a primary market perspective, which is really, really important here. I mentioned earlier about the whole primary market system giving an element of growth to the economy. From a primary market transaction, you can enable and engage a much broader set of investors than you would do in that kind of secondary market transaction. So there's a lot of opportunity there for issuers to use this system, but also we are very, very mindful that the bond markets are a very critical piece of infrastructure that we need to make sure run as streamlined and as clean and as fast as they need to when they need to.
So, Stacey, as you say, technology has really changed the game. Platforms like RetailBook now let everyday investors take part.
So, I mean, what does that look like, Jacqui? I suppose that's the question that everybody wants to understand. So what we seek to do and what we aim to do is we look at a primary transaction anywhere from equity through to debt, which is bonds, and then through to private markets as well. And we offer the investor the opportunity, but we do that with guardrails and education, and we do that also with investment banks, lawyers, and advisors. We're very, very strong on that point. We ensure that there's an opportunity of access. We have a very strong digital journey in the way that we have our offering out to the market. We work with distribution platforms very, very solidly and fantastically. And what we're doing there is we're bringing opportunity to investors on the street, but we're making sure that opportunity is through a regulated pathway and it comes back through some of those investor platforms. I think it's important that we also recognise that one of the things that we try to achieve here at RetailBook, and we think we do it successfully, is having that capital market expertise, but also making sure that there's the digital journey so that we can have speed and efficiency in the system, but also making sure that we know there's a new cohort of investors that are coming towards our markets. We need to make sure that we're very, very much at the forefront of understanding what that looks like. From you and I are sort of long in the tooth to understand, Jacqui, what sort of how markets have evolved over the last 20 to 30 years. But it's super important that we make sure that we keep everybody on the investor journey, and especially on that regulated pathway, because I think that's really, really important.
I guess access and understanding just go hand in hand, don't they? So, Stacey, I'm curious then, now that the access is widening, younger investors, women, first-time savers are starting to show more of an interest in bonds?
So it's a really interesting point. So here at RetailBook, we have a Treasury bill, UK Treasury bill offering, which has been really, really strong in its take-up. And we've also been able to look at sort of feeling around the narrative of that particular UK Treasury bill program. And for the people that don't know what UK Treasury bills are, they're a short-term deposit accessibility point that the debt management use on behalf of the government and the Bank of England. And we've bridged the access points. So typically they were used for institutions and banks. Actually, at RetailBook, you can come directly through our portal or come through via your platform and get access to those Treasury bills. Now, why I mention that is because it kind of enables us an understanding of, first of all, the demand point. This particular offering that we have has enabled a significant proportion of investors to come forward. Some are first-time investors, But also we've been able to do some really good narrative and content with some of our partners around female investing. And we've managed to see our female investing actually has gone up to 22% in our Treasury Bill programme. And that's really, really, really important if you think about the demographic of how women perhaps they don't come forward as much for their stocks and shares ISAs.
That's really interesting, Stacey. Thank you. Now, moving on to you and your achievements. I mean, you spent years engaging with the FCA to remove the split between retail and institutional markets. Can I ask you then what achievement you're probably most proud of?
Do you know what? I think one of the things is that you end up, especially in how fast-paced our environment is that we work in. I'd probably say the biggest achievement is being able to navigate through so many different things and so many different areas, but having such a fantastic collaborative co-worker environment, whether that comes from some of the relationships that I had when I started in 97 through to those that I've met very recently. I mean, I'm being taught by some of my younger team how to use to be really efficient with my technology. I think obviously I'm very, very proud of the fact that I've had some accolades and some awards, and that's amazing because I don't hold back from asking in terms of what we want to deliver for the market. So it's fantastic to get that recognition. But I'm kind of proud that I work in financial services, and I know that sounds kind of strange, but to be still around 30 years later and to be still shaping and still listening and still learning, it kind of says just what a great industry financial services actually is, and especially having the fantastic ability to work in the City of London as well. I think that really does take us forward. One of the things I've learned is that as long as you're open and honest and transparent about what you're trying to achieve, then actually anything's doable. And I think that's what happens in financial services. Hence why we're sitting here today having this conversation. Started as a conversation and now we're doing this interview. So thank you.
That's great, Stacey. So what do you think is next for you and RetailBook?
Well, we're really excited for the future. We're working hard on that digital journey, as I mentioned. We've launched this year, we've had a couple of events called The Power of Retail. We very much want to bring around a new narrative around the retail investor, the self-directed investor, if you like. Self-directed is where people are coming forward. We're seeing new platforms, new understanding. We're also seeing, as I mentioned at the top of the interview, we're seeing a lot of narrative from the retail investment campaign. We want to enable people to make decisions in their life, and we feel that RetailBook are probably pushing hard from the front on that, which is really good. I'd probably like to see the retail investor better represented. I think we're seeing that coming through with companies like yourselves, thinking about more of an investor relation point of view. We've put a bit of a bad mark on the word retail investor over the last 10 to 15 years. That needs to change. That narrative needs to come forward, especially if we're going to bring forward that new cohort of investors who really are quite excited about capital markets. It's just about enabling that voice forward. So that's kind of where we're focused on. We very much want to be a spokesperson for not only the investing community, but also for the end investor where we can and enable that access point.
Okay, thank you, Stacey. I guess, and finally, I said, is there one particular moment or perhaps a conversation that still inspires you today?
I repeat this quite often. I met a fantastic woman when I first joined the gilt market just after 2000. And she gave me some fantastic advice, which I tell every cohort whenever we do any of our younger members group sessions, which is make everybody in the market your best friend and they will be your best friend back. And that sounds really simple, but it stood me in fantastic stead. I treat everybody that I meet with the same loyalty, trust and transparency, and I hope that they do the same with me. And I think that's how we get to move forward. My word is my bond. That is the London Stock Exchange motto. We were told that when we first started in the market. It's true to us today, Jacqui.
Great. Stacey, it's been an absolute pleasure. Thank you. If anyone would like to get involved, please visit the RetailBook website at www.retailbook.com.
Thanks ever so much, Jacqui.
Welcome.